now welcome on board Rajat Sharma as well and figure out what he's making of the market right now. Rajat, hi, afternoon. Good to have you on the show as always. Just wondering and counting down now to the budget, whether there would be any ease off in the market, given that the pre-budget rally seems to have already happened.
Yeah, I know. I think the pre-budget rally seems to be going on for almost about a year. If you go back in time, and many more years from that. Just before I was getting ready for your show, I remembered many years ago, around 2015, 16, I think I was in your studio in Bombay, and Nikunj had said something about market, and he said, तेजी की छत नहीं होती और मंदी के पाँव नहीं होते. And I was just thinking about that, what he said that time, because since about 16, 17,000 levels, market had looked expensive. And I think when it reached about 2021, that's where I thought, okay, hang on, it does not look really so expensive because the earnings have started improving tremendously. And that's the sense I get about the market right now. I think in last 15, 20 years, since I've been, about 18 years to be precise, since I've been looking at the market, I have never seen this kind of bullishness and fundamentals as strong as we have right now, where pretty much anyone is saying markets is going to correct, markets should fall, and the reason seems to be only because they've run up a lot. When you look at the fundamentals, when you look at the historic price earnings, when you look at the valuations of some of the companies which we have in our portfolio, they seem still far below where they were when markets were around 20% cheaper from where they are. I guess the reason is because earnings have improved tremendously. How much longer can this go on for is, you know, difficult to say. But at this time, I think a wise thing to do would be to have 30 to 35% of your portfolio making 7, 8% in fixed income instruments, and the balance you should stay invested in the markets because, you know, typically markets don't fall when everyone's negative and when the environment is so bullish. If you ask me to put it down on paper, I can put down very few things which could be reasons for a market to fall, but it always is a bull from the so can't predict that. Valuation wise, I don't think we're so expensive.
Yeah, let's see what market throws up. For now, it's difficult to call that. But Kunal, what's the view on some of these energy names? ONGC, BPCL, Oil India, Engineers India, all of these are up anywhere between 2 to 10% right now. What's the one that you would want to recommend?
Yeah, I think ONGC is something which we discussed a few days back also. I think on the 280, 286 mark. Looks very attractive even now at 300 plus levels because the stock is now converted the short-term breakout into more of a swing breakout. So we could now expect the stock to head towards even the 320-ish kind of a range. So which means potentially a decent 5% swing, 5 to 7% swing upside is what we can expect for ONGC even from current levels. From the other names which you mentioned, Engineers India is also something which have been very bullish on, for I think the last many quarters. And I think what we've seen the stock going into a very big breakout. So, it started off with the stock, I think, hitting a breakout zone, which was around the 130 to 140 plus range. From there, the stock has done exceptionally well. There was this phase where I think in a short spin of time, the stock moved from 150, 180 mark towards 250 to 270 levels. And now just around the 300 levels, we've seen the stock consolidating. So I would probably expect Engineers India to also make a very strong comeback, even though it's a few percentage off from its previous 2024 highs, 320 approximately. But I would still believe that the stock looks quite strong and attractive. So these are the two names from the pockets of stocks which you mentioned where I would be bullish on.
Okay, so that's a take on some of these energy names, fairly active, and of course ONGC is something that Kunal believes has further legs to go. What else is happening in the market right now in terms of the buzzers? Well, Muscat talk, you have NLC India, which is doing well. GMR Airports is the other one as well, which should be in focus. Look at the flashes at the bottom of the screen. So that stock is reacting to that. GMR Power was as locked in upper circuit because the FCCB loan conversion has happened at a rate which is almost double versus the current market price of GMR Power. So that stock was locked in upper circuit, and now there's a positive news flow for GMR Airports as well. And this is one stock which has managed to see quite a bit of turnaround. In fact, Rajat, of late we have seen a lot of turnaround stories, and I think that's the classic indicator of a bull market as well, whether it's a Suzlon, an Inox, things are looking up for an HCC. You of course have GMR, which has managed to turn around as well. Any other such stories that you have managed to scout, or any word on any of these names?
No, certainly. And it is kind of, proves what I was saying earlier. You know, one of the stocks that we added, we recommended the last time I was on your show, which is not even a month back, it was 17th of last month, was a stock which is again from shipping, the Great Eastern Shipping, and I've been reading a lot of news about what's happening in the shipping space. And the only reason why I bought that stock that time and added it to a lot of client portfolios at about 1,008 rupees that time was because it was available at very attractive valuations. The economic environment looks very, very robust. And whether it was the crude carriers, product carriers, LPG containers, and dry bulk, all of them were operating at above average capacities, near the highest capacities they have. And the stock was available very attractive valuations, paying 4% dividend yield at a price of 1,008. Now that stock in like a month has run up something like 40%, 35, 30%. I think it's close to about 1,400 the last I checked, or 1,350, 1,380, something like that. And that got me wondering that, I thought it was available at very attractive valuations. It should do very well. Economy is poised for very strong growth. But the way it's run up, particularly in the last 1 month, has surprised me as well. Again, talking of ONGC, I've recommended this stock multiple times from about 128 levels when it was paying a dividend yield of 9%, 8%. Today at 305, it's still available at a dividend yield of around 4%. That's the dividend it pays. We've had clients who bought this at 128, 130, 135, and some of them sold it at 275. Some of them did nothing at that price or till today, and some of them are actually even buying it right now because essentially we do advisory for different clients and different income brackets, and the environment is so strong that some of these stocks which are offering good dividends, which we've added at various price points and continue to add. ITC is the other one, and I think you were talking about budget stocks. That remains one of my favorite budget stocks, and I wouldn't be surprised if that runs up around 20-25% from here till the end of the year, because there's reasons that in about 100 and 250 days, they'll have the hotels getting listed as a separate entity. The only reason why the stock is stagnant for about 8 months, 10 months is nobody knows what, the largest shareholder, British American Tobacco Company, BAT, will do with what they get in the hotels business. I think Finance Minister Nirmala Sitharaman will have a lot of cushion this budget to do things which would help the middle classes. So FMCG business should pick up because it's struggling because of high inflation. Cigarettes again is one area where the last two budgets they've not increased any taxes on tobacco. This time there is expectation that they will. Maybe that's the reason, and that's what market is waiting for. But that's again one of the stocks which is available at very attractive valuation. So I think I wouldn't be surprised if that runs up a lot. So there's a lot of these stocks which you want to buy. The only thing that stops you is the market has run up ferociously in the last 1 year. But again, I don't think this is a market to sit out from because there is a lot of cash waiting to come in, both domestic and from what I hear from FIIs as well.
Okay, Rajat, stay with us. Well, there are several types of value creation underway in the market. That's the word coming in from none other than Utpal Sheth in the latest episode of Masterclass. He explains why the value that you buy is as important and the kind of price that you pay is also more important than that. Here are an excerpt from his chat.
We've all seen that investors would like to buy, let's say, great businesses, good managements at reasonable value. But what is the priority out of these three variables? Right? For some people, the valuation is the priority. For some people, the business quality is the priority. For some people, the management quality is the priority. I think in a fast changing world like we are in, and where value shifts and value migration is happening in larger and larger quantum and at a faster and faster pace, one has to be with adaptable and agile management teams. This new age companies that we are talking about have a win the world mindset, okay, where scaling has does not have conventional constraints. Most companies think of growth in a very finite way, but in new age business models, maybe networks and platforms, the marginal costs are constantly dropping or are very, very low, and therefore the returns to scale are phenomenal. The marginal value creation of adding one customer is so massive in the context of the cost of acquiring that customer, right. So, we know that a lot of venture capital funds use LTV to CAC as a framework of looking at companies, but here we have the opportunities of using LTV to CAC in the context of really mature scaled businesses who have already established either leadership or dominance. So, I feel that value creation in this day and age is very different and is much less constrained as compared to the past.
Okay, so those are some pearls of wisdom coming in from Utpal Shade, but in the meantime, it looks like the market has not moved as much. Yes, we have moved into the green a bit, but it's again just a 4-point gain, so can't really make too much of it. Gland Pharma has actually managed to see a bit of a spike. You also have KIMS, which is Krishna Institute of Medical Sciences, that's also up in the trading session, and then SJVN, Lemon Tree, these are some of the other names. In fact, talking about SJVN, I also wanted your view, Naresh, about some of these power stocks. REC PFCs have been having a great run. Yesterday or day before, there was BHEL which was running up. Take a look at SJVN right now. Is there any power name that you would still want to bet on?
So SJVN and NHPC are the fresh breakouts if you look at it. So SJVN last topped out in February around 160, 170 levels. Then in May, it made a double top around this 150 mark. Today it is coming very close to that breakout. If that plays out, we could be seeing a move towards 170, 180. Similarly, NHPC also after that topping out in February, went through the same consolidation. 115 has been the high for 2 times. If that breaks, you get a fresh breakout here. So in terms of power names, these are the 2 names which are on a fresh breakout. We've seen similar breakouts happen in the CAC also. So across the board, but I would go with SJVN, which looks a better risk reward.
Right, okay, that's the take coming in and some of the buzzing names right now. Let's also take stock of, the losers in trade today, and definitely IT is seeing a bit of weakness. In fact, let's bring up what TCS is up to, and much unlike yesterday, finally you're seeing a good amount of recovery play out on TCS ahead of its numbers, which should be shortly post-market hours. 39.26 is where that stock is right now. Yesterday, of course, with the rest of the market, that also fell nearly about 1.7% or so. Rajat, what is it that you're anticipating in terms of a commentary from IT, given that TCS is today and then there'll be HCL Technologies and so on?
The full year guidance will be revised downwards is my sense. But I have always maintained when it comes to these IT companies, especially TCS and Infosys and Wipro and HCL and some of these large ones, the guidance revision is about 1 or 2% or 3%, and the stock unfairly moves a lot based on that. You look at an Infosys which has been growing at 20% year on year on their revenue for the past many years. The stock in between keeps moving higher and lower. But this is a great story. Again, one of those stocks which pays you a very good dividend. It was close to 3% up to about a month back. It may be around 2.6, 2.7 today. So these are stocks which you should add, and it's unheard of for technology companies to pay these kind of dividends anywhere other than India. I think the reason is why these companies are struggling. If you compare it with some of the US tech stocks, they've run up because AI, artificial intelligence as a theme, has really caught the imagination and minds of a lot of investors there. And Indian IT companies are not really doing anything in that direction. But I think it's just a matter of time because they're always trailing behind, what happens to their US counterparts. Look at how NASDAQ has gone up and compare it with the nifty IT sector then in the last 1 or 2 years. But I think if at all, this is a great time to add these stocks. The incremental money that we have, when a client asks us where all can we invest other than FMCG and IT and a bit of pharma, I don't see any merit. Although I think some may argue private banking space with it, but I think that's one area where I'd like to avoid. But I think IT definitely at this time. Let's see what numbers come out for TCS.
Okay, on that note, let's get in some BTST trades as well going. Kunal, let's have your list.
So there'll be a buy on two calls, two stocks. The first one is a buy on Balrampur Chini. Now that's a stock which, even though it's in the FNO ban, but the cash front, I believe it's looking attractive, completing a flat formation about the 440 mark. So would look out for targets of 465, stop loss at 430. And ITC is something which is again started to look very attractive. The stock confirming a 3-day strong up move, so more of a price volume breakout. Targets of 470, stop loss 447.
Okay, point taken. Just wanted to highlight the numbers at the bottom of the screen before I go to Naresh. So GNA Axles is reacting positively to earnings. Not a huge improvement in top line, but yes, consolidated revenue has jumped up to 400 crores versus 374 crores. I think more important will be to track the bottom line and the margin performance. We'll track that. But overall, the auto OEMs has had a very good time, at least in the last few months. Consolidated PAT has actually come down on a year-on-year basis, and that's why maybe the stock will come down as and when it starts factoring in these numbers and the decline in the profitability. Naresh, your take as far as the BTSC trades are concerned?
So first would be a buy on IOC. The stock is on verge of a breakout. Stop loss at 173, target price of 178. Second is a buy on Balrampur Chini, which has given a small flag breakout here. Stop loss at 440, target price of 480.
Okay, point taken. What else is happening in the market right now? It's more of the same. Engineers India, Gujarat people. But one space which has actually hit the record high level today is Nifty Fmcg. Pull up that index and see what kind of move it's making in the last few minutes, because Nifty has been flip-flopping, but the FMCG index is up only 0.3%, but it's at least trending higher. Any fresh bets, Rajat, that you have made in consumption, in FMCG, staple, discretionary, anything facing the consumption vertical?
Yes, in fact, we've got a few FMCG stocks in our portfolio. HUL is one where we've done buying recently because again, so a lot of these names today might sound boring, but if you see them from a valuation perspective, they're available very cheap. They've not moved a lot for a while now, for last 4-5 years. So that's where we are looking to initiate buying there. And my reason is not really because these stocks are defensive. My reason is that these stocks offer tremendous potential for growth. And I personally think this budget could be the turnaround that we are looking for, because the government has a lot of leeway to loosen the wallet for a lot of rural demand stimulation. So I think I expect to see that there would be some ease and clarification on things like soaps, detergents, biscuits, butter, powder. That's been the demand of the lobby, and I expect prices to come down both as inflation eases and the government clarifies the taxation structure for these. So FMCG particularly is one sector where we are looking to pick up a lot of stocks. The two stocks that we've added more of, in fact, HUL is Hindustan Unilever, is something that I bought for the first time in many years. ITC is where we've increased our allocation. I've already spoken about that. So it's essentially from large cap space, FMCG as it should be, like, bread and butter stocks.
So HUL is something that you've dabbled more into. That's the word coming in as far as FMCG is concerned. In the meantime, I want to put the spotlight on Tata Elxsi as well. That stock, of course, reported a number which optically looked weak, but I was expecting the stock to recover on an intraday basis, because when they were talking about the transportation vertical, they were very confident, and this quarter as well, 5.3% sequential growth. They also maintained their margin guidance despite the kind of cut they have seen in Q1. In fact, let's quickly listen to what the management had to say, because on the call they sounded confident, but for now the stock continues to reel under pressure. Tata Elxsi's management on the con call.
I think we will, continue to be within the stated, margin range. Around 28% is what we would. Essentially, the way to look at it is if you look at the entire, financial year perspective, we hope to maintain last year's, performance. Maybe beat it a little bit. And all of that depends on, our revenue growth and, in the subsequent quarters and so on. We see a lot more traction in the OEM space. And yes, when you look at a pipeline, it's a bucket of opportunities, right? Not everything is large opportunities, not everything is small opportunities. There's a bucket of opportunities that we are chasing, and I can tell you it's a pretty healthy bucket that we are chasing, and yeah, I think we're confident that we will be able to show good growth again next quarter.
We let you go on that note. Today, of course, we had Dipali Goenka, the CEO and MD at WellSpan Living, as the guest editor on the channel earlier today, and she shared with us the growth levers for WellSpan's specialty solution going forward and how they're looking to expand their market share domestically as well as internationally.
We've invested. Okay. We've invested for the growth. And now
how much have you invested in 3 years?
And I think we've talked about it. We've invested around 3,000 crores across everything at Home Solutions. That also includes our flooring, but also includes our green energy that we are also investing in the terms of going the sustainable way. When you have invested and created an infrastructure, we have actually planned and budgeted for growth there. Okay. So as we look at it, we might have to just debottleneck somewhere. We might have to put in kind of a cut and sew somewhere. And that's the way we are looking at actually creating that ecosystem. So while we look at taking the market share globally, which actually is an opportunity for India and us, that will continue to be there across the categories that we are available in and present in. When we talk about India, I think we'll be looking at the consumer basket, while what we can make, while we can create JVs, while we can acquire some companies, and creating the complete home solutions for the country, and also investing in marketing and reaching out to the consumer. So it's going to be a very interesting mix across what it needs. United States, we're putting in a pillow plant first. We'll put in the other 2 also very soon. So that completes that supply chain there. We have our warehousing there. UK and Europe also we are setting up. So I think the key thing also is technology. So while you talk about investment in manufacturing, it doesn't go just in isolation. When you're talking manufacturing, you're talking about Industry 4.0. When you're talking about technology, because it's a long supply chain, it is a little erratic supply chain. How are you integrating the entire thing in the terms of technology, predictive analytics, AI, what the consumer is going to buy? I think these are going to be a very, very, very key role. Otherwise, the inventories are going to pile up and it's not going to be viable for any one of us.
Point taken. So those were the views coming in from our guest editor today, Ms. Dipali Goenka. But in the meantime, also wanted to talk about which are the big events lined up. Of course, the market will react to the TCS numbers which come today, and the fact that US CPI is expected later today. It's expected to cool off a bit, so that's another important indicator. But come tomorrow, India CPI will be out, and that's also interesting. The industrial production as well as forex reserves for US will be out. In India, you have US PPI as well as Fed's balance sheet which will be out. Tomorrow in terms of earnings, you have HCL Tech as well as IREDA, which was doing quite well just ahead of its earnings. There is going to be a case hearing as far as Supreme Court is concerned with respect to the Stampede case, and then global earnings are also quite important. So Citi, JP Morgan, Wells Fargo, all of these will come out with earnings. So these are something that we are tracking at this point of time. But is there a positioning that you should take home as far as TCS is concerned? And let's take the intraday chart of TCS and see how it's doing, because the last time we saw it was in a bit of a green. Is it continuing that uptrend? And any trade that you would recommend on the likes of HCL, TCS, Kunal, just ahead of the earnings?
Not really. I'm not a fan too much, Anisha, of taking trades on results. It's always better to try and wait out and let the stock behave. Post results, even if it's up, assuming post results, even if it's up to 4,000, 4,100 level, but that would be more of a breakout move. So I'd be happy buying on a breakout rather than the anticipation.
Right. Okay, Kunal, Naresh, we'll see you again tomorrow morning with a reaction on TCS's numbers.
If you like this video, then like, share and subscribe to ET Now.